In Part 1, we established that business credit and personal credit are entirely separate systems, that most business owners have no business credit profile despite years of operation, and that building one starts with your DUNS number and net 30 vendor accounts. Part 2 is the execution layer. Specifically, which starter vendors to use, when to graduate to business credit cards, what a business bank loan requires, and the sequencing that gets you from a blank profile to a Paydex of 80 in under 12 months without requiring a personal guarantee at any step. The starter vendors who report to Dun and Bradstreet with no personal guarantee required are the foundation layer. The most reliable options include Uline Packaging and Shipping Supplies, Net 30 reports monthly, Quill Office Supplies, Net 30 reports to D&B and Experian Business, Granger Industrial Supplies, Net 30 reports to D&B, Crown Office Supplies, Net 30 reports to D&B. Summa Office Supplies, Office Products, Net 30 reports to D&B. Open accounts with 5 of these vendors in month 1. Place a small order, $50 to $200, on Net 30 terms and pay within 10 days. Early payment, not on-time payment, is what drives Paydex to 80. Gas and fleet cards are the second tier of the build. Shell, Chevron, and Exxon business fuel cards are available to businesses with an EIN, require minimal credit history, and report to business credit bureaus. They are not the most exciting financial product, but they serve a specific purpose, adding another reporting account in the first 90 days before you have the profile to qualify for a business credit card. A gas card that you pay off within 10 days of statement adds a trade line, diversifies the type of credit on your report, and costs you nothing if you're already buying fuel. At the 4 to 6 month mark, with 5 or more reported trade lines and a Paydex above 75, you become eligible for entry-level business credit cards from certain issuers. Capital 1. Spark and Brex are designed for this stage. Both evaluate business credit history and revenue, rather than requiring strong personal credit. Brex specifically targets businesses with no personal guarantee at all, relying entirely on your business financials. These cards typically carry $3,000 to $10,000 initial limits. Use them at under 30% utilization and pay in full monthly. They report to business credit bureaus and become major contributing accounts. Bank credit, lines of credit and term loans typically requires 12 or more months of business credit history, at least 2 years of business banking, and 3 or more years of business existence. Community banks and credit unions are more accessible at the small business level than national banks. They often hold their own loan portfolios rather than selling to secondary markets, which makes them willing to evaluate the full picture of your business rather than relying solely on credit scores. A relationship with a community bank built by depositing, borrowing small, and repaying is worth developing in parallel with your credit profile. The SBA 7 and SBA Microloan Programs are the most accessible government-backed funding for small businesses. SBA 7A loans go up to $5 million. Microloans go up to $50,000 and are specifically designed for newer businesses. Both require an EIN, business entity, and business bank account. They do require a personal guarantee for most applicants. The exception is SBA loans under $25,000 in some programs. But the interest rates and terms are significantly better than alternative lenders. Building business credit first allows you to approach SBA lending with a stronger profile and better terms. Credit utilization on business accounts works similarly to personal credit. Keeping balances below 30% of available credit is the standard guidance for preserving your score. But unlike personal credit, business credit scores can fluctuate more dramatically month to month because fewer accounts mean each account has outsized weight. A single maxed-out business card can drop a Paydex score by 20 to 30 points in one reporting cycle. Never carry a high balance through a statement date on a business card, even if you intend to pay it the next day. Separate your business expenses from personal expenses completely. This matters for both credit profile building and for your annual tax deduction. Every business purchase should flow through a business account, either a business debit card or a business credit card, with a receipt attached. This creates a clean paper trail for deductions, keeps your personal credit utilization unaffected by business spending, and ensures that your business account activity builds business credit history rather than disappearing into personal credit history where it benefits you less strategically. Once your business credit profile reaches a Paydex of 80 or above and you have 6 or more reported trade lines, request a credit limit increase on every business card you carry. Credit limit increases expand your available credit without requiring you to carry more debt, which improves your utilization ratio across the profile. This is a mechanical step most business owners skip. It costs nothing, takes 5 minutes per card, and produces a measurable improvement in both utilization ratio and the overall credit capacity your business has available for future needs. Building business credit is a sequence: DUNS number, net 30 vendor accounts, gas card, business credit card, community bank relationship, SBA loan access. Each step opens the next. The work you do in month 1 doesn't show results until month 6, which is why most business owners never start. Start today. The compound benefit of a strong business credit profile, lower rates, no personal guarantee, and real financial separation between you and your business pays for every hour of setup many times over.